Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Let's take a look at the top news from the business world today. Big news for those who have invested in the LIC IPO. The mega issue listing could be at a discount as the grey market premium turns negative. Worries over a tepid response from foreign investors. Allocation of shares to happen tomorrow. Sensex closes in the red for the fourth straight day, ends 276 points lower, Nifty below 16,200. Banks shine, IT, auto drag. Two more public issues open for subscription today, taking the total live issues to 3, while the IPO of Prudent Corporate Advisory Services closes tomorrow. The 5,235 crore rupee delivery issue and the IPO of Venus Pipes and Tubes closes on Friday. More US Fed rate hikes in the offing as inflation in the United States stays at a 40-year high. Latest number comes in at 8.3%, higher than 8.1% expected by analysts. All eyes now on Indian consumer inflation numbers tomorrow. Centre has cracked down on hoarding of edible oil in an effort to bring down prices, fines hoarding and black marketing of cooking oils in 7 states, UP, Rajasthan, Gujarat, Maharashtra, MP, West Bengal and Telangana, told to take action against the guilty parties. Sri Lanka is teetering on an economic precipice, with the central bank warning that the country's economy will collapse if no new government is formed in 2 days. The Sri Lanka Central Bank governor has also threatened to quit if politicians fail to stabilize the country. Google is clamping down on third-party call recording apps. Its Play Store on Android handsets will no longer offer call recording apps. However, the new policy will not impact built-in call recording apps which are present in most Android-based handsets. Tata has launched a new variant of the Nexon electric vehicle with a longer range. The Nexon EV Max is available in 2 variants with prices starting from 17.74 lakh rupees. The company claims it has a range of 437 kilometers powered by a larger battery and a faster charging option. The deteriorating sentiment in equity markets is hurting prospects of listing-bound companies, and LIC is no exception. The grey market premium of India's biggest IPO, LIC, turning negative ahead of its listing on May 17th. The majority of brokerages gave a subscribe rating to the issue. However, GMP has fallen steadily from its peak amidst worries of lukewarm response from foreign investors. LIC is hovering at a discount of 20 rupees in the unlisted market. Earlier, the GMP of the insurance behemoth was hovering around 90 rupees on April 30th. Grey market premium is a premium amount at which grey market IPO shares are traded before they get listed on the stock exchange. The IPO was subscribed mostly by retail and domestic institutional buyers. Foreign investor participation was muted. Benchmark indices remained under pressure for the 4th day, dragged by selling pressure witnessed in IT stocks. The Sensex and Nifty fell to their lowest in 2 months. Sensex declined 276 points, barely clinging on to 54,000. In a choppy session, Nifty briefly dipped below 16,000 but finally ended with a minor loss of 73 points at 16,167. Domestic stocks eroded 5 lakh crore rupees worth of investor wealth in today's trade, extending losses to a whopping 32 lakh crore rupees in a month. Broader markets continue to plummet, with Nifty small cap declining 2.9% to hit a 52-week low. Nifty IT was the biggest drag sectorally, tumbling over 1% today. Among the top blue chip laggards were the likes of Shree Cement, Bajaj Finserv, Larsen & Toubro, NTPC and BPCL. Building in higher oil prices and slower global growth, Morgan Stanley has lowered its forecast for India's economic growth in the next 2 fiscal years. Gross domestic product growth will be 7.6% for FY23 and 6.7% for FY24. The cut reflects a pronounced economic impact from the Russia-Ukraine conflict that has driven up crude prices, pushing retail inflation in India. Morgan Stanley believes that global slowdown, surging oil prices and weak domestic demand would take a toll on Asia's 3rd largest economy. The U.S. Fed Reserve may soon hike rates again, with the country's April inflation numbers coming in at 8.3%. The number at near 40-year highs, but there could be some relief on the horizon, with month-on-month inflation rising just 0.3%. This is the smallest gain since August last year. Rising fuel prices could, however, spoil the party for President Joe Biden and his administration. Fuel prices rose above $4 a barrel again in May after remaining below the mark in April. Food prices have also stayed high this month. Meanwhile, inflation numbers resulted in selling in cryptocurrencies, with Bitcoin immediately plunging 6% to under $30,000. With rising inflation, prices across the board are skyrocketing. If you're thinking of decorating your house, it will cost you more. Asian Paints, which had hiked prices recently, is all set to raise them again. According to Amit Singhal, Managing Director and CEO at the company, macroeconomic challenges and heightened geopolitical tensions will lead to a surge in prices. Listen in to an excerpt of the conversation I had with him earlier.
Going forward, what we see is that given the demands which we have seen in February and March, we think the consumer demand would kind of continue into the Q1, which is there to that extent. The only party spoiler can be the inflation, because the current geopolitical situation and the other things which is there, we see about a 5 to 7% increase with respect to the prices in terms of what has happened overall as far as the raw materials are concerned. So I think that is a little bit of a worry which is there, which could be possibly kind of forcing us into some of the price increases. We have already taken 2 price increases, one in as on 1st of May and the other we have announced on 1st of June, totaling to about 2% price increase overall to that extent. But what we are, I think, reasonably confident that if we are able to calibrate our price increases, we are still looking at possibly a strong consumer demand in Q1 of the financial year 22-23 going forward.
Even as wheat flour prices touch record highs in the country, the grain itself has turned into a diplomatic ace up India's sleeve. With the global market starved for wheat after Russian and Ukrainian supplies dried up due to the war, Indian traders stepped in to fill the vacuum. India has received orders and delivered wheat to new markets like Egypt, Israel, Indonesia, Mozambique and Tanzania. Even Turkey, a country which does not see eye to eye with India, has ordered 50,000 tons of wheat, breaking the ice between the two countries. Meanwhile, Indian traders have set a new record by exporting 14 lakh tons of the grain in April. This compared to just 2.4 lakh tons exported in April last year and 70 lakh tons in the full year. With the new harvest reaching warehouses this month, wheat exports are expected to rise further in May. Central government has found hoarding and black marketing of cooking oil in at least 7 states. A recent inspection drive by the central government found hoarding by traders in Rajasthan, Uttar Pradesh, Maharashtra, Gujarat, West Bengal, Telangana and Madhya Pradesh. The centre had last month invoked provisions of the Essential Commodities Act to keep cooking oil prices low. Let's get more information from my colleague Chetan Bhutani, who's following the story. Chetan, take us through.
Well, Ava, the recent geopolitical events have really shot up the prices of edible oil throughout the world, and hence there was in India a need to inspect and keep a check on uniformity and ensure that there was no unfair trade practices as far as edible oil were concerned. However, the government last month had launched an inspection drive in which the hoarding and black marketing of edible oil was found in about 7 states. Rajasthan, Uttar Pradesh, Madhya Pradesh, West Bengal, Maharashtra, Gujarat and Telangana are these 7 states where black marketing was found. In fact, 8 central government teams along with the state government officials were deputed to carry out such inspections. Department of Food and Public Distribution has written to the chief secretaries of all these states to ensure that these violations be kept in check. In fact, the government last month had notified the stock limit order by invoking the provisions of the Essential Commodities Act, which regulates and empowers the central government to regulate and distribute and keep a check of edible oil and edible oil seeds. Around 56% of edible oil in India is consumed and met through imports. So clearly, the government has stepped in to ensure that the prices remain stable. However, the government is soon also likely to go ahead with the second round of inspection to ensure the prices are further kept in check and no black marketing or hoarding of edible oil is taken place.
Thanks for that, Chetan. Let's take a look at what else is making news in the corporate world. Aditya Birla Group's Novelis will invest $2.5 billion to build a new low-carbon recycling and rolling plant in Alabama, USA. The highly advanced facility will have an initial 600 kilotons of finished aluminium goods capacity per year. As the EV frenzy continues, auto major Tata Motors has unveiled its new Nexon EV Max SUV. The car will cost over 17 lakh rupees, offers a range of 437 kilometers. The battery pack is also around 10 kilowatt per hour, more than the standard Nexon EV. The deliveries for the Nexon EV Max are likely to begin soon. Ford Motor has sold 8 million shares of electric car maker Rivian Automotive for $214 million. Ford now holds a 10.5% stake. Rivian is struggling in a competitive market, including competition from Ford's F-150 Lightning electric pickup truck, while a supply chain crisis is limiting production at its plants. Oil marketing companies including Bharat Petroleum, Indian Oil and Hindustan Petroleum have entered into a long-term purchase agreement for upcoming dedicated ethanol plants across India. As per the agreement, ethanol produced by these dedicated ethanol plants shall be sold to OMCs for blending with petrol. "17-month-old e-commerce enabler GoQuick raises $35 million in a Series B funding round. The round was led by Think Investments and RTP Global, and existing investors Sequoia Capital, Matrix Partners also joining in. With the newly raised funds, the company plans to expand its team and enhance technology and data science. The company also plans to foray into Southeast Asia. A crypto exchange has for the first time openly talked of the shadow ban on cryptocurrencies in the country. US-based cryptocurrency exchange Coinbase has blamed the Reserve Bank of India for suspending business in the country days after it launched operations in April. Addressing investors in an earnings call, Brian Armstrong, the exchange's CEO, said he was forced to suspend operations because UPI was disabled on their platform due to informal pressure from the RBI. Let's listen in to what he had to say.
There's a lot of interest in crypto amongst the people there in India. So we had an integration with what's called UPI, and this was a great example. So a few days after launching, we ended up disabling UPI because of some informal pressure from the Reserve Bank of India, which is there. And India is a unique market in the sense that the Supreme Court has ruled that they can't ban crypto, but there are elements in the government there, including at the Reserve Bank of India, who don't seem to be as positive on it, and so they, in the press it's been called, quote, a shadow ban, basically to try to disable some of these payments which might be going through UPI. I guess we have a concern that they may be actually in violation of the Supreme Court ruling, which would be interesting to find out if it were to go there, but I think our preference is really just to work with them and focus on relaunching.
Cryptocurrency exchange CoinDCX has launched its investment initiative, CoinDCX Ventures. In a bid to bolster India's digital asset ecosystem, CoinDCX Ventures would invest funds in early-stage crypto and blockchain startups. Listen in to what Sumit Gupta, co-founder and CEO of CoinDCX, had to say on this new venture.
So about the ventures, the overall fund sizes we have set aside is roughly 100 crores. And the plan is to deploy it over the next 12 months or so. And we are looking at investing in roughly 40 to 80 startups over the next 12 months. The typical check size is around $100,000 to up to $1 million. So primarily it covers the seed stage investments in Series A. But the mandate from our side is pretty flexible. We have even done investments in companies which are beyond this scale as well. Very happy to announce that we have already made 7 investments and many more are in the pipeline. And if anyone wants to be a part, wants to apply, they can reach out to our ventures team at ventures@coindcx.com, and they can also visit our website, which is hosted at coindcx.com/ventures. In terms of the sector focus, we are looking at companies who are solving for themes like making crypto investing easier and safer for the masses, companies who are solving for crypto as an investment class, companies who are building custody solutions, working on the compliance side. DeFi is a very active area for of interest to us. So anyone who is working on the DeFi companies which are building Web3 developer tools, and even companies who are taking Web2 applications and building it in a decentralized manner. So we are very excited across all the themes that covers the larger Web3 ecosystem.
Let's take a very quick break. Also have a look at the Apple iPod one last time. After 21 years, Apple has announced the discontinuation of the iconic portable music player, the iPod. There have been various models over the years, including the Nano, the Shuffle, but the iPod Touch, which was released in 2007, will remain on sale until supplies run out. The light-weighted devices killed portable CD players and personal FM radios in a snap, becoming an overnight sensation in the world of music. But nothing lasts forever, and it's time we bid farewell to Apple iPods. You're with us here on Ask Udayan, the show where we answer all your stock-specific queries with our global business editor, Udayan Mukherjee. Do remember to send in your query on the number on the screen. We'll try and take as many as we can every week. Our first question today from Prasad in Mumbai. Let's listen in.
Hi Udayan, I am having L&T Finance shares at an average price of 105 rupees, holding it for last 3 years. I have about 500 shares. Should I hold it or should I exit? Kindly advise.
Well, you've had to be quite patient with L&T Finance because it's a rare example of an L&T stock which has not performed at all last couple of years since you have held the stock. And the reason is that L&T Finance has just not been able to demonstrate the kind of growth and performance which investors expected of it. They took a lot of wrong turns in the wholesale lending space, but now I think the company is going through a major transition. It's trying to get out of the wholesale lending space and focus only on retail, which is SME loans and consumer loans. You can see the clear signs. Recently, they have been cleaning up their wholesale book by selling off some of their non-performing assets to asset reconstruction companies. The issue is how successfully is L&T Finance able to make this transition to retail. If it is successful, then it may pay off to hold this stock for the next year or two. So I think the thing to do for you is, having been patient for 3 years now, is to give the management another 2 or 3 quarters to see or to demonstrate if their shift to retail is actually paying off. If it manages to pull it off, then I think a new retail credit cycle might bring good things for L&T Finance. I'm not expecting the stock to be a rocket in the near term. I think there are better NBFC plays out there. But since you are already an existing investor, I think you might just give the management the benefit of the doubt for another 2 or 3 quarters and see how it is panning out.
All right. Nisarg from Ahmedabad is looking at Heritage Foods. Let's see what kind of time horizon he has.
Hi Udayan, Nisarg Shah from Ahmedabad. Is it good time to buy Heritage Food for 2-year horizon?
Well, Heritage Foods is the dairy space, and it's a space which I like quite a bit because I think dairy as a space in India will exhibit fairly significant growth in the years to come. The problem, as we were discussing with Hudson too the other day, is that there is a raw material issue out there in the dairy space today. Because milk procurement prices have gone up such a lot, margins of players like Heritage Foods are getting squeezed over a period of time, and therefore they're not able to grow profitability that significantly. And that's putting pressure on their stock price performance as well. This will continue to be an issue for some time, and the answer lies in actually enhancing the share of value-added products for milk companies or dairy companies like Heritage. Right now, 25% of Heritage top line comes from value-added products, which is not plain milk. And the more they sell of these value-added products, curd, cheese, ice cream, they're able to pass down this raw material or milk price increases to consumers more successfully, and therefore their margins are protected. So I think the thing to monitor for long-term investors of Heritage Foods and dairy companies is how much of their incremental sales are coming from value-added products and how much they're able to protect their margins against high procurement prices of milk. So keep monitoring that. I think it's a good space, but in the near term, stock prices might remain under pressure because of the high milk prices that they're forced to buy at.
Okay, let's talk about Dabur now, and it's Kalpesh from Mumbai that has a query on his investment there. Go ahead.
Hello sir, I am your follower from my school, from my 10th school 2003. I am Kalpesh Patel from Mumbai City. I am holding Dabur share at the rate 450. Should I hold or exit? And I want to know if the crude palm oil export ban from Indonesia, what is the impact upon the FMCG sector, and higher inflation price in India, what is the impact upon FMCG sector? Is it positive or negative?
No, I think all FMCG companies are feeling the pinch of higher raw material prices. There's no doubt about that, Kalpesh. You're right in pointing that out. And that's the reason why Dabur has not been performing over the last 6 months or so, because in line with other FMCG companies, because A, their valuations are not cheap. Dabur itself is trading at a 40 PE multiple. And B, there is an issue of growth and raw materials. Take a stock like Dabur where the urban and the rural segment are almost 50-50, 55-45. And Dabur's problem is not so much in the urban segment where growth is holding up, but at the bottom of the pyramid, the rural segment, which is still 45% of Dabur sales, I think there's a marked growth slowdown. So overall volume growth, which has been quite strong for Dabur over the last couple of years, in fact stronger than many of its peers. I mean, if you look at companies like Marico, Britannia, even Hindustan Unilever or Godrej Consumer, I think Dabur's volume growth has been far superior compared to these players. But now the question is whether it can negotiate the rural slowdown to still continue to demonstrate the double-digit volume growth that it has been exhibiting better than some of its peers. On the other hand, there is the issue of raw material prices, which is also a small kind of an issue. There is an issue with the Turkish lira, and Turkey is an important market for Dabur. There is a lot of volatility with the lira of late, and that poses some kind of challenge. So I don't see Dabur being a huge performer as the market makes up its mind on how to value stocks which are expensive in the kind of transition period that we are going through. So you may get 10-12% kind of growth, and Dabur is one of those steady kind of compounders over long periods of time. So it's a good management. Its market share in products like hair oil, Chyawanprash, toothpaste is all growing. So no problems with the management. The issue is one of growth in rural segment, and B of valuations which are already quite elevated, and therefore I don't see it delivering 20% plus kind of returns in the near term.
All right, that's all we could pack into the show today, Udayan. Thanks so much for taking out the time to answer all those queries. Do continue to send in your questions to the number on your screen. We'll be back again next Wednesday.